听见资本，本期视频为您带来的是摩根大通在4月4日录制的关于全球贸易战升级引发大宗商品市场剧震等相关话题的内容。经济衰退风险显著上升，影响商品需求。过去这一周，大宗商品市场风云变幻，仿佛几天内就经历了数十年的动荡。金价刚创下历史新高，原油也逼近每桶75美元，但紧接着，美国宣布了史上最高、范围最广的加征关税措施，瞬间引爆市场。中国的迅速反击尤其值得关注。对美国进口商品加征高额关税，这对依赖大豆、谷物等出口的美国农民来说，无疑是沉重打击。虽然北美贸易伙伴暂时幸免，缓解了部分压力，但更大的阴霾正在逼近。对美国明年陷入经济衰退的预期大幅提升至 60%， 这已经引发了原油等市场的剧烈抛售。这意味着什么？未来几周甚至更长时间，大宗商品领域将面临剧烈动荡，贸易流向被迫重塑，伙伴关系面临洗牌。值得注意的是，并非所有商品都同样脆弱。小麦这类基础食品在经济衰退时需求相对稳定，但棉花等非必需品则面临严峻挑战。同时，美国农民的种植计划也出现调整。如果与中国的贸易争端不能在秋季收获前迅速解决，他们的出口将面临巨大风险。更令人担忧的是，即便衰退风险高企，全球食品价格指数仍在持续攀升。接下来的内容将深入剖析这些巨变背后的逻辑、不断升级的风险，以及这些关键市场未来可能的走向。接下来是英文的全部内容。如果您需要我的投研助理人工校对的中文文本，您可以在频道的 Patreon 上获取。
Hello and welcome to this commodities episode of At Any Rate. I'm Tracy Allen, Senior Commodities Strategist and Head of JP Morgan's Agricultural Market Research, and I'm pleased to be your host today. Well, it's been another one of those weeks where it feels like decades happen in days. Liberation Day, in fact. We started the week with historically high gold prices, Brent crude prices ticking up closer to $75 a barrel, opened the week at close to historically high open interest value across global commodity markets. And well, that was very short-lived. And after the US president certainly gave a very thorny delivery in the Rose Garden on Wednesday with the delivery of sweeping, broad-based, and some of the most historically high rates of increase in tariffs known in the US. Subsequently, for agricultural markets specifically, there has been somewhat of a respite here that's been alleviated across CBOT specifically. There has, of course, been a 0% tariff rate levied, or remaining to be levied across USMCA compliant goods. So in that case, they're essentially remaining exempt from US import tariffs. The broad and sweeping baseline of tariffs across other major trade partners of the US, they were certainly not so lucky. And we've already seen retaliation from a number of partners, and most notably China today, responding in a tit-for-tat method, as our economists like to call it, increasing the import tariff on US goods into China by an incremental 34% from the 10th of April. So from an agri-market point of view, there has certainly been more widespread tariffs that are now incorporated across the soft commodity complex. As we know, certainly the CBOT complex and certainly the soybeans, as well as grain export flows, cotton export flows had already been very much implicated in the US trade war 2.0, certainly with China, certainly after China retaliated against US import tariffs, certainly earlier in March. And those markets have been largely priced out of one of the main leading export markets in China for arguably over a month now. The delivery, however, of the exemption or the 0% tariff rate on USMCA line items really alleviated the risk of retaliation from Mexico, which is the US's second largest export market, particularly for the likes of corn flows, alongside soybean export flows, and a very, very significant, if not largest export partner with respect to primarily livestock, beef products, dairy products from the US there. So as we look forward here, it's really important to note the very much change in the landscape around economic growth. It's something that I've been flagging in our publications over recent weeks. Not only that our economists had previously been anticipating a US recession risk rising through 2025, but one that certainly has material implications for agri-consumption going forward alongside broader global consumption. We have seen our economists shift their risks around a US recession this year to 60%, in fact, through the course of 2025, up from 40% previously. And along those lines, we have seen a very sharp sell-off across markets today, as I alluded to, crude down 6 to 7% across the markets here, specifically as we are essentially pricing in a recessionary period. The dust is really yet to settle, however, across the markets, and we're still yet to see, I'm sure, a lot of retaliation and trade discussions pass through here over the days and weeks ahead. However, it is important to note that particularly for the commodities complex and agri products in particular, we're certainly bound for a very volatile ride over the weeks ahead as trade flows look to reroute, partnerships either are restored or new trade partners are found, and we'll be certainly bringing those developments to you going forward. Important to note, however, that agri markets do stand out amongst the commodity complex as some of the more resilient product lines in recessionary scenarios, specifically thinking here around quite stable products with demand bases, more so of a very stable food consumption base here, thinking about products like wheat and to a certain degree also corn, which has also been very stable with respect to consumption patterns over the course of recessionary periods historically. Interestingly, also sugar and palm oil fit into those categories too, around relatively stable demand side growth periods through recessionary outlooks. It is typically a far more challenging demand side outlook, however, for the likes of discretionary products like cotton, certainly cocoa, which has had an immensely volatile week, moving up 12% by Thursday and selling off another 6 to 7% around recessionary risks today specifically. So there is a bit of a bifurcated risk across ag markets, but in aggregate, fairly stable performance from certainly the BCom or an aggregate agri index relative to a lot more of the base metal and energy type complex, which typically are generally more demand side driven. And just a final word with respect to the USDA's formative planting and quarterly stocks reports that we had received on Monday, which of course feels like a lifetime ago now. Main takeaways being that US farmers really indicated that they intend to plant lower wheat acreage than both we and the rest of the market had anticipated on that basis, and that in fact most of the trade expectations were correct in anticipating a vast increase in corn plantings and reduction in soybean plantings. So going forward here, US farmers, of course, subject to immense risks from the point of view of export flows, particularly with the extensive retaliation that China has already waged there. And in the event that there is no expedited trade agreement with China, certainly ahead of September, October, then there are going to be substantial risks for US export flows in the new crop. I'm hopeful, however, that there could be some expedited deal done there, but something that we need to really be very cognizant of. Very large, certainly new crop of corn on the way, a smaller crop, however, of both wheat and soybeans. Just a final note today that on that basis of what we have seen to be more constructive outlooks across certainly the grain markets through the start of this year at least, interesting to note that the UN FAO food price index has once again ticked up through the month of March for yet a consecutive month, up about 0.2% for the month, but actually if we look over the course of the last year, it represents a 7% increase on the year, and that was really driven by sectoral and broad sectoral increases, particularly across sugar prices, which has been a firm call of ours through the course of this year, as well as dairy price increases and vegetable oil prices, something that we need to watch out for going forward, particularly in what is really said to be a very volatile demand and price environment going forward. Well, that wraps up this week's edition of the Commodities at Any Rate podcast. Thank you all for listening, and we look forward to continuing the conversation next week. This communication is provided for information purposes only. Please refer to JP Morgan research reports for its content and for more information, including important disclosures. Copyright 2025, JP Morgan Chase and Company, all rights reserved. This episode was recorded on the 4th of April 2025.